Good after. Good afternoon, and welcome back for another episode of Broker Talk, our weekly show about the real estate and the allied industries. I'm Larry Lawfer, your host each week, where we bring you a half hour of unvarnished truth about these industries. Today's show is a star spangled event, an important show for anyone who is a veteran or works with veterans who are purchasing a home. In my mind, veterans of our armed forces who have served their time to protect and defend our country have earned the right to have an advantage when they purchase a home. The VA loan is that advantage. The VA loan, with its 100% financing, is sometimes the best offer in a bunch of offers for reasons our guest expert is here to share with you. Before I bring in our guest, I'd like to reintroduce a guy who years ago was told that if you're a musician, women will love you. Sadly, he left the room there and didn't hear that it was the bass, the guitar, the drums, and he went off and got himself an accordion. Jim Lowenstern is the founder and CEO of Castles Unlimited International. Welcome aboard, Jim.
You're gonna allow me to talk? Okay. Um, I was 5 years old when I started playing the accordion. I have to defend myself. What can I say? I do play the guitar and the bass and the drums and the piano. Uh, yeah, there you go.
Yeah,
Trumpet, French horn, and the baritone too.
and
Even
we
play
have
the piccolo and a little triangle. So thank you, Larry.
yeah, yeah, you're welcome.
Appreciate that.
Tell who's ever talking in the office to be quiet while we shoot this. Anyway, back to the back to our regularly scheduled program. Rick Bettencourt of Caliber Home Loans is the leading VA loan originator in all of New England. He serves on the national boards of these organizations and spends time sharing his vast knowledge within this community and our entire real estate community at large. The average real estate agent has no idea that last fiscal year there were 1.246 million VA loans completed. Here in Massachusetts, there were 2,800 of these loans. Rick, welcome to the show. Thank you for sharing your deep knowledge. What are some of the common misconceptions about VA loans? Why are some agents so ill prepared to present a VA loan to a seller?
I think, and thank you very much, Larry. Thank you, Jim, for having me. So it's a pleasure for me to be here. Really quickly, I mean, the biggest one oftentimes is that 100% financing means it's a bad loan. I think we will be able to debunk that very quickly. You'll also get oftentimes that the VA appraiser process, the appraisal process is convoluted. It doesn't appraise in the same manner as a non-VA appraisal, that the property has to be perfect, turnkey. The seller must pay for all repairs. I mean, the list goes on as to what is out there. And I'm not going to say that previously, back in the 40s and 50s, that VA loans were easy. They were not. But where we lack is the re-education of our industry and the various iterations that VA home loans have gone through just in the last 5 years, that propel this particular loan option to be one of the best home loans out there in the United States.
Well, I said in the opening that sometimes the VA loan is the best loan to have.
Yes.
Tell me a scenario in which that is true.
Let's, in our industry, a lot of times people quantify a good offer by the size of the deposit, right? I mean, if I see an offer, it's an $800,000 offer and it's got 20% as a deposit or a down payment, that's a good deal. They look at the same VA loan, 850,000, 100% finance, and they're like, that's a bad deal. And so let's peel back the layers on the onion a little bit and take a look and see what's really inside. It's impossible to quantify a good deal or a bad deal simply by looking at a contract of purchase and what the size of the deposit is. That 20% non-VA loan might have a 625 credit score. Their debt to income ratio could be maxing out what would be the allowable limits for that particular transaction. The money may have been completely borrowed by the individual, which gets happen all the time. And now they're only very limited on assets in that particular situation. So that is, when you peel back the layers of that onion, could very, very well be a possibility. And I've seen that. But if we look back at, say, this particular VA loan, it's 100% financing. The credit score is a 796. They have a 27% debt to income ratio with $5,000 a month in residual income, plus they have $70,000 in liquid assets. So now I ask that agent, which is the better deal? Generally, the rebuttal is, then why don't they put the money down as a deposit or down payment? And I go, the difference here is that hero earned the right to not use a down payment, and it's got a 25% guarantee from the VA. So the lender only takes on 75% of the risk for lending. So that is clearly, unequivocally, and data-driven, a much better deal for the seller to accept.
Right. And one of the things about that whole down payment that you put down and how sellers think somehow that money is theirs at that moment, it's just not true.
No,
There's no difference between 5% down and 40% down to the seller until you actually close.
yeah, correct. I mean, I advise all my veteran borrowers, like, listen, this is the Commonwealth of Massachusetts. Our culture in the real estate industry has been such that there's a deposit. So you got to get a deposit, right? I'll give you a quick example. I just got a clear to close today on an $850,000 VA loan, 30 days before it's supposed to close. The deposit money was a personal loan that they took out at a local credit union for $50,000 to use as the deposit money. I debted the individuals for the debt, that personal loan. They qualified, they'll close. That $50,000 deposit will be used to pay the closing costs of about 11 and settlement charge of about 11.5. They're going to get a check back that day for $39,000 and pay off most of the loan that they borrowed for the deposit. Now, no other loan option out there, Fannie, Freddie, FHA, USDA, will let you use a personal unsecured loan for deposit or closing costs. They won't let you do that, but VA does. So that I literally, right before I got on this call, I got the clear to close for a July 12th closing today on a VA loan with no down payment.
So, Rick, I've been in the business for decades. I have never done a VA loan. I don't know. I mean, maybe there was a buyer on one of my listings, but I can't recall one. How do we educate the public?
That's a great question, Jim. I think we do these. We have great conversations with experienced and well-respected individuals in the business because, you've been doing it a long time, Jim. So hasn't Larry. You guys are Larry, board of director for G-Bar. You guys are well-respected individuals in our industry. You're mentors. So when we work, we talk together, and we share this information. How we educate the public or how we educate our peers in this industry is really to do research. Work with a mortgage professional that literally does this on a daily basis. That the problem that we have is agents have a bad experience because they work with a mortgage professional that just doesn't know VA. So therefore they don't know there are other things that we have to do within that VA pre-qualification process, clearly. And if a mortgage professional doesn't understand those steps, like I'll give you an example. I have to ask what the square footage of every single house that an offer is being made on for a VA loan, because VA uses, you probably have never heard of this, but VA uses what's called a maintenance expense to quantify or calculate the residual income of a VA loan. So we have to look at the square footage, 2,000 square foot house, that is a maintenance expense of 14 cents per square foot. We add that $280 a month into our residual income calculations. So if a mortgage professional doesn't understand that because they only do one or two of these a year, unfortunately, you guys, being the buyer's agent or the listing agent, may have a deal that falls apart, and therefore now you go, it's VA, and what will end up happening, I'll guarantee you, is the mortgage professional will not openly admit, I screwed up the residual income calculations. They'll simply say, VA didn't like this loan. And therefore, it gives a bad sort of taste to the agents involved in that transaction, and they really shouldn't have. So, working with somebody that really understands the entire handbook, the VA handbook, and how it works and how to ask appropriate questions, disability, tax exemptions, maintenance fees, maintenance expenses, residual income. Those are all, we have to ask how many, another thing, I have to ask every veteran, do you have children? What are their ages? Do you have daycare expenses? Those are questions that we have to ask. I don't have to ask those for a non-VA borrower, but I have to ask those for a VA borrower because the size of the household is directly tied to the residual income requirements that VA has for all loans in the Northeast. over $80,000. So, there's a lot of things that we can go through.
So the residual income, that's income to the borrower or the lender?
It's the borrower. So really quickly, what we do is we look at the gross income, we back out FICA, Fed, Social Security, Medicaid, all those. We have the net. We subtract from that their debt. We subtract the maintenance expense, and then we're left over with whatever's remaining. That's the residual income. So VA has a chart, and you have to have that residual income or more.
Some of the changes that buyers agents need to understand, and listing agents as well. If you have a buyer coming in with a VA loan, that property needs to be approved by the VA. That's a series of papers. There's a pest inspection that is necessary. That's something that's a form that has to be filled out. There's like maybe 5 or 6 different forms that your loan officer will provide so you can get the approval for the loan from the VA.
Yeah, I mean, the appraisal the VA appraiser does an appraisal on the property like anything else. Any other real estate transaction, they'll look for the minimum property requirements, what we call MPRs. The biggest two that you're going to find around here for New England properties are peeling paint, missing handrails. And the old philosophy was that the seller had to pay all those. And that's not true. The seller doesn't have to pay for a single expense or a single repair that pops up as a result of the appraisal. And matter of fact, the seller doesn't even have to pay for the pest inspection.
And Rick, you were talking about the zero down payment.
Mm-hmm.
So that's all the way through the closing. The VA approved loan will sail through. The buyer doesn't pay even closing expenses, zero?
No, they pay closing costs. Yeah, so settlement charges are there's nothing's for free in this world. So they do have the expenses of settlement charges, attorney fees, title insurance, escrows, things of that nature. They do have to pay that. But the other one area that I find agents really kind of get confused is the difference between a deposit and a down payment. They're two separate things. They're identified separately on the contract to purchase. It's just that when an agent or a mortgage professional says, yeah, you're going to put down $25,000, more often than not, they're referring to the deposit piece where you guys are getting them under contract and they've got to do that $1,000 check and that $24,000 check. That's a deposit. But in the second page of the contract to purchase, you can actually identify, and I think I showed Larry this on one of our recent VA purchase transactions, that you could put $50,000 as a deposit on a $650,000 purchase and still have on second page $650,000 financing. That's the appropriate way to do it so that there's no legal issues when it comes to financing amounts. But yeah, we just try to teach everybody exactly what the proper nomenclature is.
And to solve that, what we also did was we made a statement within the instructions that we were doing 100% VA loan.
Correct.
So it was on both pages of the offer. Hey, let's stop for a minute, and we'll be right back after this short break.
When you are searching for a new home, you want to be working with a realtor with years of experience, a professional with intimate knowledge of the communities that you are considering moving to, and someone who really wants to represent you as a buyer in what is probably the largest investment you will ever make in your lifetime. The realtors at Castles Unlimited want to be your choice when you're ready to make your next move. Please visit us at castlesunlimited.com or call us anytime at 800-967-3561. The realtors at Castles Unlimited are here to help your next purchase, lease, or sale of any real estate the easiest decision you've ever made. Start your search anytime, 24/7 at Castles Unlimited.
Hey, we're back. So we're talking about VA loans with Rick Bettencourt from Caliper Home Loans. Rick, I think that one of the things I know that I was concerned about was when I presented the offer, I wanted to kind of figure out if the listing agent had any experience with this. What kind of questions can you ask if you're presenting an offer with a VA loan, 100% financing?
I would say first and foremost, I mean, do you have any experience with VA loans? Do you understand? If they say yes, I do. Okay, great. Even if they say yes, well, great. How often do you come into contact with a VA transaction? Have you had any bad experiences? What was that bad experience? Try to find some of those pain points that they might have experienced. Would you be okay to talk to the mortgage professional? Is it okay if the seller talks to the mortgage professional? Those are some important questions because we want the seller to be comfortable. It's an important part of their lives. They're making a big transaction with selling their house and maybe going someplace or downsizing, and they want to make sure it works. They want to get top dollar, right? Well, we all want to get top dollar. So, but I would ask, how often, how frequently do you work with or receive offers that are VA, and do you have any issues with that and kind of communication? I think since TRID came out a few years back, communication is the most vital part of what we do now. We have to have a much better communication
Back and forth.
back and forth, especially nowadays.
I've found with veterans who are doing these loans, the higher up, the captains, the majors, these people are wired, so they don't miss anything. They're paying attention to what the paperwork is, to what the deadlines are, and they're generally really on it. They're good clients to have.
I mean, I love my military clients. I mean, from an E1 private all the way up to an 06, colonel. What I find about veteran clients is that when you tell them to do something, they do it,
Right.
and they do it very, very well, because
Right.
that's how they've been trained. You go ahead and say, give me all these documents, and 24 hours, they give it to you. It's racked, it's stacked, it's like little paper tabs on it, and you're like, oh my God, right? Some of us non-veteran clients we're kind of all over the place, right? And they just bring paperwork in and it's scattered, and you're not sure. So sometimes it takes us a little while to put it together. But military clients, two things: they're the most organized clients that you'll have, and they're the most loyal.
Yeah. Yep.
100%.
So Rick, so with zero deposit, how would I guess a buyer's broker sell that concept in a market where offers are cash, no inspections, over the asking price?
Before you answer, it's not, you're saying no down payment at all. They do put down the closing costs. Sometimes
I've never done a VA loan here in the Commonwealth of Massachusetts where the veteran didn't put a deposit on the contract to purchase when they made an offer. It might have been small. I've had a couple $1,000, $2,000 deposits, but they've always had a deposit. You're 100% right, Jim. Cash offer, you're gonna lose. It's just that's just there's some things to. It is what it is. But as far as the down payment goes, again, if the veteran gives you a $25,000 deposit and they're financing 100% of $600,000, if I tell you they're qualified, you know what I mean? The deposit doesn't make a difference. And what's funny is if you look at the actual math behind it, so if I was to take $25,000 on a VA loan and put it towards the actual loan amount, the mortgage payment changes about $100. That's it. So in our mind, we think $25,000 makes or breaks the deal, but $100 might change that debt to income ratio by 0.56%, 0.6. It's really negligible in the overall qualifying math behind the borrower. 25 grand doesn't mean anything. It's very insignificant to the debt to income ratios.
And yet 2,500 is a lot of money to a lot of people.
Correct. It is. And you look at the math, and I'm not to say 25,000 isn't a lot of money. It's significant. But when we look at the payments that some of these buyers are having right now, $600,000, $700,000, $800,000 homes, the 25,000, I would rather them keep that in their bank instead of putting it towards a down payment. Use it as a deposit. It pays for your settlement charges. You get some of that money back, and then you can use it for creating an upgrade in your new house when you move in.
So Larry was telling me how these loans are basically approved even before the offer's made.
We did that for our offer that Larry and I understand the apprehension of many agents towards VA. So what we will do is,
especially in this market.
Correct, especially in this market. It's very funny too, when you go over to New Hampshire and you come to Mass, different. New Hampshire, they'll accept an offer with $2,000 deposit. They don't care. Very different. And Massachusetts, it's different. It's just culture, right? But for our purchase, knowing the difficulty we'd be facing, we got all of the captain's documents that she's what's called a PCS, or permanent change of station, from Ohio to Hampshire Air Force Base. We put her into underwriting before she even was looking for houses. The day that they went out looking, I issued a commitment letter for them. So they're done. That's it. There's no, it's just provide me a property with clear title and an appraised value. And we're good. That's it. So that was a very, I imagine, a comforting thing. But the seller didn't know.
How much time after that do you need to actually close? A week or two?
You know, a bit more long, you need a little longer than that. Right now, title's backed up a couple weeks sometimes. Appraisals will take between 10 to 12 business days. So you're looking at, 2 weeks there. So, 30-day closings on VA loans is a piece of cake. That's not a problem whatsoever.
Yeah, it's equivalent to the regular.
Yeah.
It's not longer.
They're underwritten in the same way. So we put Captain Bagby's loan in on a Wednesday, and we issued the commitment on Monday morning. So 48 business days, 48 hours, really, essentially.
So Larry, she's really a captain. I thought Captain was her first name.
No.
That's a little something that I've been doing in my career, is that when working with the officers or active duty personnel, I call them, Larry will tell you, every email it's Captain Bagby. And they she's active duty. She earned that rank. That's her rank, and she deserves the respect for that. So that's what I do. And I think that they do appreciate that.
They do.
That's a little trick for you to kind of build camaraderie. I shouldn't say trick, but a little tip. Camaraderie is to give them that honor of their rank, and
they deserve the respect. Absolutely.
And she also told me, like, the first day that we were together, because we were back and forth for like 9 hours that first day looking. She flew in. She only had 6 days. We had to find something and close it in this market. And about halfway through that time, she said, "Stop calling me Captain. Call me KB."
And what's funny is she hasn't told me that yet. So for you, that was important. She'll probably, and she's an incredible woman, she'll probably grant that to me after we've closed and the deal's done. But
yeah,
that's been my experience in the military community for a long time. And I think that it's important to give them that respect, like you said, Jim.
So Rick, is that an actual office or just a screen behind you?
It's a background. I found it on the internet, and I use it as my background. We're in the process of moving our office here in about 2 weeks, so it's kind of a mess behind us.
Because I noticed there wasn't a lot of activity.
No. Yeah, we're moving right now in about 13 days.
It's a nice office, though.
Anyway, let one more break. We'll be right back. That makes you hungry, doesn't it? The thing we want people to understand, you asked the question, how do people know about it? One of the ways is listen to this show. So, as we're wrapping up here, Rick, give me like 5 or 6 things, 3 things that agents should know about VA loans. First of all, it's 100% down. Well, you go ahead with it because
5 or 6 things. One,
thanks.
Underwriting, no different than conventional loans. They're the same. Takes the same amount of time. 2, the appraisal process, its valuation is the exact same as non-VA. We do have a little bit of a benefit with VA where we have what's called Tidewater. That is a great benefit to VA. Tidewater, really simply put, The value is going to come in under value. The appraiser notifies us before we get the appraisal. And then me and the agents have the ability to get 3 additional comps to support that value and try to bring that value up to support the contract price. No other loan option out there. Office Tidewater. So call me if you have any questions. I can walk you through that. Condos. VA condos do not take a long time to approve. We're working on one right now. Once we submit all documentation to VA, I got 3 VA condos approved last month. My fastest was 48 hours, 2 business days to get a condo VA approved. They're good borrowers. Most of our VA clients, they're not bad borrowers. And remember, 100% financing, it's not because they don't have the money, it's because they earn the right to not put a down payment towards their mortgage. VA loans actually perform just as good as non-VA loans, as a conventional loan. And they're
statistically over a period of
without
time.
doubt. Fannie Mae and Freddie Mac, CoreLogic, Ellie Mae Origination Insight Report, they'll show you the default rates, serious delinquency rates. They're almost identical to conventional. There's very little difference. And I think culturally it's because veterans always, or military service members, I should say, they pay their housing debt on time, almost like clockwork. So they are good loans, they're good borrowers, there is assets there, and they have really, I mean,
How are the interest rates in comparison to the conventional?
Yeah, they're typically going to be between a quarter to a half, up to a point, perhaps better. See, the thing is, VA
better.
Better.
Oh yeah.
Better.
I mean, I just locked a VA $850,000 loan in the mid twos. Like,
Really?
right, yeah, right. That no PMI, by the way. VA is not as susceptible interest rate wise to lower credit scores. So if I was going to do a conventional loan at a 630 FICO score, that rate might be, who knows, low 4s, high 3s. Whereas a VA with a 625 FICO score, maybe 2.7, 3. So we don't see a lot of fluctuation in interest rates based on credit scores.
And are there different programs? Are there ARMs and fixed and different maturity dates? And
sure, we can do any term VA loan because Caliber sells directly to Ginnie Mae. We service all of our own loans. We have our own servicing portfolio of about $157 billion. So we don't sell our mortgages. We don't sell to aggregators or Wells, Chase, whatever that. We keep it in-house. So since we sell directly to Ginnie Mae, which is the securitization for VA, we go ahead and I can do any term you want, 28-year, 27, 26, 25, 30.
That's an advantage.
We have ARMs, although it's very, very small percentage of the overall VA portfolio is ARMs. Most of them are 30-year fixed or fixed rate mortgages. So, it's just like everything else, but the big difference here is that the Department of Veteran Affairs guarantees 25% of whatever the veteran borrows. So if a veteran borrows a $400,000 loan, 25% of that, or $100,000, is backed by the Department of Veteran Affairs. So if they ever go belly up, when we foreclose in the house, the VA sends us a check for $100,000. So therefore, when a lender lends on VA, they're only accepting 75% of the overall risk. 25% of the risk has been mitigated by the Department of VA.
so that's similar if someone put, in that case, $100,000 down.
There you go.
Exactly.
And that's how you have to look at it. The reason why the veterans have no PMI, lower interest rate, more forgiving credit guidelines, and the ability to do different things is because 25% of the risk is picked up by the government, and therefore the lender's only lending 75% of the risk. So
And the borrower still has the money, which makes the loan more secure.
So now the veteran doesn't have to dump $100,000 of their own money onto this loan. They get to keep that asset in a 401k, mutual fund, stocks, bonds, whatever it is, checking savings, and they have those funds if the value comes in a little short, to pay their own settlement charges, to upgrade that property, to build wealth, to grow the equity in the house. So it's all in all, I have yet to find anybody that can tell me that a VA loan is a bad loan. I can't find anybody that would beat me on that argument.
Sounds great.
It's
awesome.
Yeah, and I'm thrilled. You are for those people in the greater Boston area. I saw that you are giving a webinar soon aren't you, Rick? To
We just had one. So we're planning another one. I just had a webinar for our realtor community. We had about 70 realtors on there. I actually brought in the valuation officer from the Cleveland Regional Loan Center that governs our area. We had about 67 agents actually asking the valuation officer for Cleveland Regional Loan Center all appraisal property related questions. That was awesome. It was a 2-hour webinar. It was free. The gentleman from the VA, his name's Marty Finley, he's a great friend of mine. We'll be doing another one in a few months, and I'll share that with you.
So when we post this, perhaps we can put a link to it on our show page so people can also see that.
Yeah, once Marty, myself, and my team at Caliber, we're working on the details as to when we're going to have that. And because now that we're coming out of the pandemic, we're waiting to hear if VA will allow travel, and you might be lucky enough to get the valuation officer out here for an in-person presentation on VA appraisals for our real estate community here in Massachusetts.
That's great. Well, Rick Bettencourt of Caliber Home Loans, I so appreciate all of your help, all of your insight. Thanks so much.
Thank you very much.
Nice meeting you, Rick. Great
You too,
show.
Jim.
Lots of good information. Where's that music, Larry?
Here we go. Huh?
Huh?